Hey guys, we hope you guys are doing well and you guys are enjoying your week so far. Welcome to another episode of Teach Me Tuesday. So, today we're going to give you guys a market update. We're definitely a little over half of the year has already gone. And so, we want to kind of let you know what's going on in the market as it relates to home sales, interest rate, loan programs. We have a really good episode for you guys today. My name is LaShawn Abraham. I am the branch manager and I'm a producing loan officer with New American Funding. I'm serving all clients here throughout the state of South Carolina and Georgia. Mr. Abraham.
Gavin Abraham, the same loan officer here in all of South Carolina and Georgia, and excited for another Teach Me Tuesday. I'm excited to give you guys an update on where we are with today's market.
What's up, guys? Wilmot here with the Beard Group, brokered by EXP Realty, here on another Teach Me Tuesday, and super excited, as always, give you this market update. Yeah, let's go.
Well, let's get right into it. So, what are you seeing, Mr. Berry? What are you seeing when it comes to home sales and days on market? Do you feel like the market's slowing down, speeding up? Is it a good time to buy? Should people wait? Give it to us. Let us know what you are seeing out there.
Okay, well, I just from my feel of the market, what I'm seeing as I operate in this market daily, I am seeing a increase, and y'all correct me if y'all see the same thing. An increase in buyers, starting to come because of interest rates. I'm seeing that as well. People are getting a little bit more interested in the market as a buyer per se. I will say in the Orangeburg market, because we are in a state of development, I'm seeing, man, every time I ride around, I'm seeing a home being renovated or a yard being cleared out because an investor bought it in this neighborhood and they're about to renovate that property. So I'm seeing a very, very big interest in the Orangeburg area, the 29118 and the 29115 area. So, yeah, 803, you know. So,
That's good. That's good to know. But okay, so you're absolutely correct. Because same here. I think lately, soon once school kind of started and people kind of started to settle in, I definitely
absolutely.
seen a lot of buyers that was on the fence kind of jump back into the market, wanting to get pre-approved, or if they was pre-approved, they're now back actively looking and so forth. So on your side, Wilma, when you see these new developments or people starting to have more activity, whether they're sprucing their home up to sell it, or whether, builders are coming in or developers are coming in to, bring and open new communities. So to a buyer or a prospective, even a prospective seller, like what does that really mean when they start really seeing these little small, subtle movements in the market? Is that a good sign that the economy is strong? Is it a good sign that they should jump into? Is it more competitive? Like, what do you think?
So I will say this. I'm seeing a lot of movement from people that are in the Somerville, Charleston area, kind of migrating this way,
Mhm.
because of the price points. And I will say this, and I'm not just trying to sell you on Orangeburg, but I will say this that, you know, your price per square foot is a whole lot lower than your price per square foot down here in Somerville and Charleston area. So
Mhm.
if you are willing to commute, you can probably get, not probably, you will get more bang for your buck in the Orangeburg area and possibly commuting to your maybe your job, Somerville and Charleston area, if you do have an occupation that way. But one thing I didn't touch on, LaShawn, I didn't give any numbers. Okay, I like to let me give you some data.
Yeah,
So
what those house prices looking like in
so
Orangeburg?
yeah, so I'm gonna specify it. So those of you that are interested in Orangeburg, or those of you that's in Orangeburg, you know your zip code, your 29118. So you're gonna have 29118, and then you're gonna have 29115. Okay, so your 29115 is more city centered. Okay, your 29118 is more your outer skirts of Orangeburg, but your price points will be more expensive out there because the homes are nicer out there and you get more land for your money out there as well. So your 29118, your average, what I'm seeing estimated home sales in that area is around $250,000, around
Okay.
250, 253,000. That's your
Mhm.
average home in that area. Average days on market, I'm looking at around 36 days on market. Okay. Average days on market. What I'm also noticing, and just to give you some perspective, in the last 3 months, the average sales price has risen. Okay, in the last 3 months, in that homes in that price range. Okay, sales price has risen around. This is a pretty sizable number, around 31%. Okay.
Oh wow, that is.
Oh
Yeah.
wow.
Yeah, I'm seeing that. Like I said, I'm seeing an influx. We're starting to see an influx of people seeing the home values. I tell investors, once you go above that 250 now, just understand that days on market does increase once you get above that 250 mark. And also, just understand that the days on, like I said, days on market will increase. And also the percentage of how long, I can't even get my words right. The days on market will increase, but also the percentage of buyers will decrease as you go up in price point. That's what I'm trying to say. I apologize. Yeah.
No, you said it well. That makes complete sense. Complete sense. And that just takes us into our next update, Gav, when it comes to rates, right? Because buyers kind of, they follow the price, right? They follow the price of the houses, they follow the price of interest rate. To me, a lot of buyers are motivated by that as well. So when it comes to interest rates, what are you seeing as far as an update goes when it comes to loans with down payment assistance, without, that whole little pot of rates? What are you seeing out there?
Yeah, I mean, I think it's going hand in hand with what Wilmot's seeing. Of course, more buyers are coming out because now more people can afford homes. And that's simply, one of the reasons for that is because rates are dropping, so which are making payments lower, which are, just making a borrower who wasn't qualified at a 7.5% interest rate, just a few months ago, can now qualify at a closer to a 5.5, 6% interest rate. But let's talk about rates. Where are they today? Rates are currently right now ranging anywhere, depending on programs and depending on, whether you're going conventional, VA, FHA, or USDA, but rates are balancing anywhere between the low 5% to still as high as 7%, 7.5%, depending on programs. So most popular to our state and to a lot of our first-time home buyers, they typically lean towards state housing programs, SC housing. Currently right now, without any down payment assistance, where you can just take advantage of the lowest rate option that they have. We're talking 5.25% as of today. Actually, I think that's dropped to 5.125%. I'll check.
Wow, that's a great rate.
Yeah, you know what? That they every day we get it at 10 a.m. Let's see. Yes, and indeed, 5.125% as of today.
Oh,
so, guys,
really.
I mean, when we thought, as we just crept up in the last 2-3 years, post COVID, when interest rates started jumping up, hiking due to inflation, we didn't know that we were going to get back down to the low fives, and we're at that cusp where we're about to break through in the fours. Because we also are expecting a upcoming another rate cut from the Fed. We don't know exactly how that's going to.
Matter of fact, the Feds meets tomorrow, September 17th.
On the 17th.
Yeah, they meet tomorrow, so we'll see what they do.
Yeah, so we'll see. That may also correlate to interest rates for mortgages dropping, but we don't know. We'll see. We'll see after tomorrow what that does for our market. But yeah, man, like I said, rates are trending anywhere depending on program, as low as right now 5.125%, and as high as up to 7%, depending on what loan program and all the particulars of whether you meet certain requirements to get those lower rates, or if you're going to fall in that middle tier or that upper tier.
That's really good stuff. And I think you really brought up such a great point, what people need to understand when it comes to interest rate, because you gave a pretty large range from 5.125 to as high as still maybe 7%. And so for people to know, like, well, what's the major difference? Well, how do I get the 5% rate, right, versus the 7% rate? So this is all going to be very, 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 very selective and subjective to your particular scenario. Like if you are an investor, as Wilmot mentioned, that rate will tend to be higher because most of those lower rates are for first-time home buyers if you're getting down payment assistance. So kind of keep that into perspective. And so last but not least, we're going to kind of roll into our third segment of this market update, where we kind of give you some updates on some loan programs. Because one of our goals here with our Teach Me Tuesdays is to make sure that we are definitely, equipping and keeping you guys up to date with what's going on with programs, because loan programs and guidelines, they change. They may not change daily like rates, but they do change. So our first up is one of the programs that we have here that's exclusive to New American Funding. It's called our NAF, which stands for New American Funding Cash Program. And so that's a really good program. It's very similar to those of you who may have been familiar with Ribbon, where during COVID, pretty much an investor group like Ribbon bought the house for you if you had a house that you were interested in, and they paid cash for the house, and then later in return you paid them back, for the money that they took out for you. So New American Funding have a program very similar to that. So what everybody's predicting that's going to happen in the future as these rates continue to drop, as these prices continue to level out, is at some point we're going to have a huge influx of buyers back into the market. Mm-hmm. We may be back into this whole multiple offer situation again that we had back in COVID days. And so in order to keep yourself competitive when you're kind of competing against cash buyers and investors, using a program like our NAF Cash is going to be very, very, very important to you, because it'll allow you to submit a cash deal, even though the agency is buying it, and you buy that house back from them on the back end. So you can kind of close quicker and kind of move a lot faster. So that's one update. The second update that we have is with our conventional loans. So we have an investor called Freddie Mac. So typically our two biggest conventional agencies are either Fannie Mae or Freddie Mac. So Freddie Mac did an update with their self-employed borrowers or buyers. And so a lot of people may not know is that a lot of people think when you're self-employed that you have to have 2 years of tax returns in order to buy a house if you're doing traditional financing. But that's not necessarily true. So with certain investors like Freddie Mac, you can get away with just 1 year of tax returns. But the update that they made is they want to make sure that even though you have less than 2 years of tax returns, we still want to make sure that you have a 2-year work history in the same field. So that's where the importance is. It's the same field, because a lot of times, let's say if you're a truck driver, right, and you work for, let's say Pepsi, or you work for a company, and then all of a sudden you decided to go out independent and you just started your own trucking business. So you may have just that 1 year tax returns, but your previous employment was still in trucking. So you'll still be good to go there. But if the situation was a little bit different, if let's say you worked at, I don't know, Zeus or something in the manufacturing plant, and you decided I just want to be a truck driver, the next following year, and you only have 1 year, because it's not in the same field, we wouldn't be able to do that loan. So that's something that's very important that you should keep in mind when you're thinking about careers and changing and switching jobs and so forth. Mm-hmm. Last update we have for you before we wrap up on Teach Me Tuesday is something that I think a lot of people may not be familiar with as well, but this is called escrow holdbacks. So it's very similar to, some people may want to do like renovation loans. If you buy a house that may need some repairs, like let's say something was going on with the foundation or the roof, or you wanted to do something with landscaping. Typically, if these type of major repairs came up during like a home inspection or an appraisal, you normally would have to get those things fixed before you could close on the loan. Unless you were doing a 203K type of loan or something like that, we will not allow you to proceed. But you can do something called an escrow holdback, where if the seller has agreed to pay for these things, but they need their money from the seller of their house in order to pay for these repairs or renovations, they can put that money aside in an escrow account, still allow you to close, and then that money that's held aside up to $10,000 can go towards those repairs or renovations that you want to make. Typically, you have to be able to have those repairs and stuff done before 60 days after you close, but it's a great option, a great alternative for, just options out there if you're looking to purchase. So those are the updates that, we have for you today. Is there anything else, guys, that you want to add to our Teach You Tuesday market update segment today?
I just want to add something. I was just looking at some of these charts that I have, and if you guys need any of this information, I'd be happy to send it to you. Just inbox me. I'll be more than happy to send you this data. But I was just looking at the strong trend that is in the housing market. Man, when I'm looking at the median estimated home values, I mean, it continues to just rise. It might have a little, stabilization and then rise again. I mean, just a strong market, for homes. Okay. And I just feel like, one of the best investments that you can make is an investment in your home or, in a house. Okay. If it's going to be a rental property or some type of investment property you're going to flip or what. So home prices are increasing, continuously appreciated over time. So I just want to encourage you guys, hey, get some assets and let real estate be one of those assets. So just want to encourage you guys. And if you need any of this data, please let me know. I'll be more than happy to send it to you.
I absolutely love that. What about you, Gavin? Anything else you want to say before we wrap up for today?
No, not at all. Just you guys just keep on tuning in, man. It's a lot of good information that that we give because we know it's not taught, so we just show up every Tuesday and show up every week to make sure that we can give a little bit of what we soak up just in our industry and our time and our expertise. So keep tuning in, man. Keep tuning in.
All right, guys, until next week, same time, same place. We will definitely chat with you guys later on another Teach Me Tuesday. Have a great week.
Have a good one.
Peace.